listening. First of all, I would like to introduce myself to all of you here. My name is Natasha Dewintha. My student ID is 18104264424. I am from class Accounting D. I take Accounting English from Mr. Adi Mursalin. In the opportunity, I would like to answer the question given by my lecturer, Mr. Adi Mursalin. The question consists of three parts, namely Part A, which is related to the accounting theory and its practice, Part B, which is related to videos of accounting, and Part C, which is related to accounting archetype. Well, I start to answer the question in a Part A. Number 1. What is accounting? Write the definition of accounting to 5 experts. And my answer is the following definition of accounting according to 5 experts. The first, Abu Bakar and Wibowo. Accounting is a procedure that recognizes the recording and correspondence of financial exchange from an element or organization. The second is Arnold. According to him, accounting is a system that provides information to anyone who must take the decision. The third is Charles Thomas Horgren and Walter T. Harrison. According to them, accounting is defined as an information system that measures business activities, processes data into reports, and communicates the result to decision makers. The fourth, accounting systems are defined as the organization of record forms and reports that are coordinated in such a way as to provide financial information needed by management to facilitate the management of the company. The fifth states that the main purpose of accounting is to carry out periodic calculation between cost and result. Number 2. What is accounting cycle? And explain in details the cycles. The answer is accounting cycle is a step-by-step process of recording, classification, and summarization of economic transactions of a business. It generates useful financial information in the form of financial statement including income statement, balance sheet, cash flow statement, and statement of change in equity. The time period principle requires that a business should prepare its financial statement on periodic basis. Therefore, accounting cycle is followed once during each accounting period. Accounting cycles start from the recording of individual transaction and ends of the preparation of financial statement and closing entries. Number 3. Mention the accounting question and explain the component of accounting question. And the answer is, for explain the components of accounting question, the accounting equation shows that total assets should be equal to total liabilities plus owner's equity. Asset equals liability plus equity by adding revenues and expense. Act 1 can be expanded to Act 2. Revenues increase owner's equity and expense decrease owner's equity. Assets equals liabilities plus equity plus revenues expense. By moving expense to the left side of the equation, Act 2 can be arranged as Act 3. Asset plus expense equals liabilities plus equity plus revenues. Number 4. What is account and why are the use of accounts in accounting equation? And the answer is, in accounting, An account is a record in the general ledger that is used to sort and store transactions. Number 5. What is the purpose of accounting? The purpose of accounting is to accumulate and report on financial information about the performance, financial position, and cash flows of a business. This information is then used to reach decisions about how to manage the business or invest in it, or lend money to it. Number 6. What are assets, liabilities, and owner's equity? First, assets. An asset is anything of value that your company owns, including cash. There are several types of assets. Current assets. These are assets with dollars amounts, reversible inventory, or raw materials your company used to make a product. Investment companies, like individuals, can own securities such as stock and bonds. Capital assets. Think of capital assets, also called planned assets, as permanent things your company owns. Intangible assets. Patents, copyrights, and other non-material assets that have value are referred to as intangible. Second, liabilities. Anything a company owes to people or business other than its owner is considered. Liabilities are two types of liabilities: current liabilities, long-term liabilities. Third, owner's equity. Owner's equity, also called capital, is any debt owed to the business owners. Number 7. What is business transaction? A business transaction is an event involving an interchange of goods, money, or service between two or more parties. Number 8. What are revenue, expense, and withdrawals? Revenue is the amount of money that a company actually receives during a specific period, including discount and deduction for returned merchandise. An expense is the cost of operation that a company incurs to generate revenue. As the popular saying, it costs money to make money. Withdrawal is the act of taking back or away something that has been generated or possessed or removal from a place of deposit or investment. Number 9. Explain the step for analyzing the business transaction. And the answer is 6 steps of business transaction analysis. 1. Identify the accounts affected. 2. Classify accounts affected. 3. Determine the amount of increase or decrease for each account affected. 4. Which account is debit? 5. Which account is credit for what amount? 6. What is the complete entry in the T accounts from? Number 10. Mention 6 business transactions happening in company and their business transaction. 1. Purchase office supplies of 750,000 rupiah. Analysis, equipment or assets increased by 750,000 rupiah. Cash or asset reduced by 750,000 rupiah. Explanation: equipment increased because there was a reduced purchase transaction because it was used to purchase equipment in cash. 2. Purchase equipment amounting to 900,000 rupiah, which will be paid next week. Analysis: equipment or assets increased by 900,000 rupiah. The business will increase by 900,000 rupiah. Explanation: equipment increased because there is a credit purchase transaction. The business interests increase because of buy equipment on credit. 3. Purchase a vehicle of 5 million rupiah paid in cash of 10 million rupiah. The remainder is paid in 1 week. Analysis. Vehicle or assets will increase by 15 million rupiah. Cash or assets will be reduced by 10 million rupiah. The business will increase by 5 million rupiah. Explanation. Vehicles or property increase because there is a reduced purchase transaction because the amount of money paid is only 10 million rupiah. The business is increased because there are still outstanding payment in the amount of 5 million rupiah. Number 4. Paid employees salary of 700,000 rupiah. Analysis. Cash or asset reduced by 700,000 rupiah. Capital reduced by 700 rupiah. Or salary burden. Explanation. Cash is reduced because it is taken to pay salaries, which also results in reduced capital because the expense incurred by the company result in capital being reduced. 5. The result of the business are 1,900,000 rupiah. Analysis. Cash or assets increased by 1,900,000 rupiah. Capital increased by 1,900,000 rupiah or service revenue. Explanation. Cash increased because it receives money from the result of the business, which also simultaneously increase capital or capital income. 6. Should money is taken for personal use amounting to 150,000 rupiah. Analysis. Cash or assets reduced by 150,000 rupiah. Capital reduced by 150,000 rupiah or brief. Explanation. Cash is reduced because of personal needs that also reduce capital. This is the answer number 11.1. Determine the amount of owner's equity Cecil Jameson capital as of July 1, 2007. Owner's equity equals assets means liabilities. Owner's equity equals asset means liabilities. Equal cash plus accounts receivable plus line accounts payable plus supplier equals. I will repeat answer number 11.1. Determine the amount of owner's equity Cecil Jameson's capital as of July 1, 2007. Owner's equity equal to assets mean liabilities. Account under asset is cash $1,000, account receivable $3,200 plus land $10,000 plus supplier $850 minus accounts under liabilities is accounts payable $1,530. Owner's equity equal to $15,050 minus $1,530. So owner's equity equal to $13,005. And point 2, state the assets, liabilities, and owner's equity as of July 1 in equation from similar to that shown in this chapter. In tabular form below, the equation indicate the increase and decrease resulting from each transaction and the new balance after transaction. Accounting equation. Assets equals to liabilities plus owner's equity, and means accounts that are in assets here include cash, account receivable, equipment, and land. While the account named in the liabilities, there is account payable, and the existing account named on equity owners is Capital Cecil Jameson. This is the balance of Cecil Jameson on July 1, 2007. That is $1,000 cash, $3,200 account receivable, $850 equipment, $10,000 land, $1,530 account payable, and $13,520 Capital Cecil Jameson. The first transaction has two accounts, namely cash and Cecil Jameson capital. Cash increase and Capital Cecil Jameson increase. Second transaction, paid creditors on account $1,055,000 happen to cash accounts decrease $1,055 and accounts payable decreases $1,055. Third transaction to cash accounts is increased $3,700 and $3,700 Capital Cecil Jameson increase. The first transaction occurs to cash accounts decrease $1,200 and Cecil Jameson capital decrease $1,200. Fifth transaction, there are two accounts. Accounts receivable increase $2,025 and account Cecil Jameson capital increase $2,025. Sixth transaction, there are two accounts. Accounts equipment increase $245 and account payable increase $245. Seventh transaction, there are two accounts. Account cash increase $3,000 and account receivable increase $3,000. Eighth transaction, there are two accounts. Accounts payable increase $1,635 and account Cecil Jameson capital decrease $1,635. Ninth transaction, there are two accounts. Account cash decrease $1,500 and Cecil Jameson capital decrease $1,500. Transaction, there are two accounts. Accounts equipment decrease $115 and account Cecil Jameson capital decrease $115. 11 transaction, there are two accounts. Account cash decrease $1,000 and Cecil Jameson capital decrease $1,000. And the answer number 11.3, income statement. Cecil Jameson Lawyers income statement for the month ending July 31, 2007. Costs obtained $5,953. Operating costs. Paralegal fees $1,635. Rental costs $1,200. Wage burden $850. Utility costs $325. Insurance service fees $250. Inventory costs $115. Miscellaneous expense $75. Total operational costs $450,000. Income limit $1,503. And the answer number 11.3, balance sheet. Cecil Jameson Lawyers balance sheet July 31 to 2007. Assets: cash $6,873. Receivable $2,225. Stock $980. Land $10,000. And the total asset is $20,078. Liabilities: account payables $2,355. Owner's equity: capital Cecil Jameson's $70,723, and the total liabilities and owner's equity $20,078. And the answers number 11.4, cash flow statement. Cecil Jameson Lawyers cash flow statement for the month ending July 31, 2007. Cecil Jameson Capital July 1, 2007. Additional owner investment $3,700. Current month net income $1,503. So the total is $5,203 minus brief $1,000, and the total is $4,203. Increase in owner equity. Cecil Jameson Capital July 31, 2007 is $17,723. This is my answer for part B. First video, the title is Principle of Accounting. The speakers, March Christopheren. This video tells about principle of accounting, and that is inside understanding of what accounting is, who use accounting data, the building blocks of accounting, ethics, assumptions, forms of business ownerships, the basic accounting, equations, owner's equity, using the basic accounting equation, transaction analysis, financial statements, and accounting career opportunities. The conclusion of what is accounting. Accounting is the integral process of smooth functioning. Basically, accounting is recording the financial transaction in the books of accounts, classifying the transaction into different heads and subheads, summarizing the accounting data into reports and financial statements, and interpreting the financial data to assist decision making. Accounting helps organizations to determine their financial rights and obligations. Without proper accounting, it would be very difficult for a business to calculate. For example, the exact amount a supplier needs to be paid, taking into account cost purchase. Title of Video 2: Review of Accounting. I will repeat the answer of Video 2. Title: Review of Accounting Equation and How Transactions Affect the Equation. Speakers: Mursalin de Priets. This video describes business transactions that occur and how they can affect the increase or decrease that is generated after each transaction. The conclusion of this video is how transactions impact the accounting equation. Video 3, the title is How to do a Balance Sheet. The speakers: Superfast CPA. This video tells about how to do a balance sheet. An example in this video is Scammer Corporation balance sheet December 31, 2011. The conclusion of this video: how to do a balance sheet. A balance sheet is a financial document that shows the assets, liabilities, and owner's equity of a company at a given point in time. It's different from the income statement in that it is a snapshot on a given day, whereas the income statement spans a time period. Most companies prepare their balance sheet quarterly and yearly. How to do a balance sheet. To put together a balance sheet, you will obviously need all of the financial data from your different trial balance. In reality, the information for a balance sheet starts with the individual transaction, but the purpose of this article is just to show you how to organize a balance sheet. First of all, there are two sides to the balance sheet, the right and the left side. On the left side, you will have your assets. On the right side, you will have two sections, liabilities and owner's equity. The left and the right side will always be equal, and the main balance sheet equation is assets equals liabilities plus owner's equity. This makes sense because the assets are on the left side and it will always equal what is on the right side, which is the liabilities and owner's equity accounts added together. Video 4. The title is Financial Accounting Income Statement. The speaker: Matt Fishers. This video explain the income statement and format of the statement. Financial accounting is a specialist branch of accounting that keeps track of a company financial transaction. Using standardized guidelines, the transaction self-recorded summaries and present in a financial report or financial statement such as income statement or a balance sheet. Video 5. The title is Introduction to Accounting. The speaker is Kimberly Dunn. This video tells us about what is accounting. Business need to communicate three types of accounting. Accounting is the language of business. There are three types of accounting. 1 is tax accounting, 2 managerial accounting, 3 financial accounting. Tax accounting is a structure of accounting method focused on tax rather than the appearance of public financial statement. Tax accounting is governed by the Internal Revenue Code, which dictates the specific rules that companies and individuals must follow when preparing their tax returns. Managerial accounting Each manager used the provisions of accounting information in order to better inform themselves before they decide matters within their organization, which aids their management and performance of control functions. And financial accounting is a specialist branch of accounting that keeps track of a company's financial transaction using standardized guidelines. The transactions are recorded, summarized, and presented in a financial report of financial statements such as an income statement or a balance sheet. This is my answer of a part C. 1. Why is accounting a great course to study? And the answer is because accounting provides you with skills and knowledge that can be applied to a number of industries. In fact, so long as there are business in the world, accountants will always be needed. Number 2. What do accountancy do? The answer: accountants deal in reality. They don't speculate. Accountants know the rules and follow them and are good at keeping track of figures. They might make assessments based on information in front of them, but they deal less with the unknown than, say, a finance-related position. The primary role of accountant is to prepare and examine financial records. Accounts ensure the accuracy of a person or business financial records and that bills and taxes are paid properly and on time. A job as an accountant may also involve the following. Point 1. Organize financial records. Point 2. Review statement for accuracy. Point 3. Make certain that records and statements comply with the law. Point 4. Compute tax out. Prepare tax returns. Ensure prompt payment. Point 5. Inspect account books and accounting system to keep up to date. Point 6. Suggest ways to reduce overheads and increase revenues and profits. Point 7. Provide auditing service. Question number 3. Why is accountancy a good foundation? The answer is accountants can hone their craft through the application of known methodologies, and accountancy certification is always valuable. You will learn how to focus on money management, financial recording and reporting, and the best processes to save cash for a business or sole trades. These skills are desired in every industry. Question number 4. What must you have when you want to study accounting? When studying accounting, you will acquire knowledge about the laws that govern business, typical business administration schemes, the ethics of accountancy, statistics, and accounting theory, and you will also have subjects that overlap with other finance-based courses. Question number 5. Is accounting right or wrong for you? Give the reason to your answers. And my answer is accounting is right for me because accounting can help me solving and concrete data. Question number 6. Are you sure that accounting will help you in the future? Give the reasons to your answers. I'm 100% sure that accounting will help me in the future because there are lots of people whose job it is to help talk you through these decisions. Even if we decide to switch careers later, we'll have great foundational understanding of how money is recorded and reported that will only help we in long term. Question number 7. Why does accounting have a good prospect of job in the future? And my answer is because if you decide to study a diploma of accounting, you probably won't have to wait long to start working. Jobs in accounting are always in demand, and the skills you learned through studying are transferable and can be applied to many other disciplines. Okay, thank you for watching this video. Bye bye.